be
Well, then
honest
good.
with you, I feel like I have nothing intelligent to say right now because I just don't understand the markets. I just don't get it. So
I mean,
because of
it's all
that
good.
reason, huh?
I said it's all good. Something
So
always
because
intelligent comes out of your mouth, so it's fine.
yeah, because of that reason, like I just feel like I don't understand anything. I don't get it. I really don't understand anything. Like, I really just don't. I don't get it. I really just don't get it. So it's like like I'm not gonna sit here and make something happen. It's like being in a trade that you don't have an edge in, so you're just there because you're just trying to make something happen. It's
Yeah.
kind of like the same thing. Like so, but you did see the thing over the weekend where what I tell you that SpaceX is going into the NDX. SpaceX is going into the
Yep.
NDX.
Yeah. It starts up on Monday, right?
I think they said July 1st or something like that, or July
July
2nd.
1st.
The bottom line
Uh,
is that
let's
they're
see.
putting him in. That's the bottom
Yep.
line. So it's like,
That's quick.
you know,
What's the
I
usual
told
time
you.
frame on that?
Oh, it's months. They want to see quarters. They want to see quarters of they want to see, how the company's financially doing. They don't want to just, throw anybody in there. But they definitely skipped that one out. Whatever.
Yeah.
All right.
Pulled some strings for it.
Yeah, right. Pull some
Yeah,
strings.
for
He
sure.
wanted in. That's it. That's the string.
Whatever he says goes. All right. Well, then I guess let's try and make sense of the market. Yeah.
Sure.
Let's go through market backdrop, then talk a little bit about macro geopolitics, things like that, things that play a role in the market now, which is debatable, my opinion. We can go through some key tickers, some setups. We can talk about the scanners. And then, if anybody pops in, we could always have a Q&A session, but we'll see how that goes. All right.
Okay. Rock and roll.
All right, cool. So let's start with the backdrop of the market. S&P, NASDAQ, that stuff continues to roll, right? Really, even though, how much are we off of the highs? Like NASDAQ, we're like 3.5%, 4% off the highs.
The
Five and a
problem
half.
is there's a lot of
Probably about 5.5.
volatility. Well, there's a lot
Yeah,
of volatility, but we're going nowhere. Like we're literally going
right.
nowhere.
Yeah,
So
we're just chopping with between the highs and the low of that sell-off day, the June 9th.
yeah, I mean S&P the same thing.
Yep.
There's a lot of movement. I mean, the average S&P move now is about 100 handles. So it's moving about 1.25% a day from high to low, roughly.
Hmm.
Yet we're literally going nowhere. Like we're just going nowhere. And you have a VIX that's sitting at 18, 19. So volatility is broken. I mean, there's nothing.
Hmm.
It's not even zero DT because zero DT has no effect on that. It's just volatility is just broken, completely busted. Like, there's no other way to say it. It's
So
just busted and broken.
how do you figure volatility is broken? Because intraday, especially specifically futures, NQ futures, they've been rather tradable.
I'm talking about the VIX. The VIX is broken. The VIX. The VIX
Oh,
by
my bad.
itself is a broken instrument. That's your measure of volatility. It is completely and totally broken. You
Yeah,
can't
that's
have,
volatility across the market, right?
yeah, you can't have. Well, it's S&P. It's really S&P volatility, but it's really it. But you can't have. Let's just call it like it is. S&P is basically almost 8,000. Let's just say, right,
Yes.
7,500.
Yeah,
You can't have it with
7350.
an 18 vol. It doesn't make any sense. Like it literally doesn't make any sense. So volatility is broken. There is no volatility. You
Hmm.
know, we're moving up and down, like I said, like 100 handles a day, but we're going nowhere. Like, what kind of market is that? Like, what is that? There's just no volatility, and what that tells you is they just don't respect any risk. They have no respect whatsoever. They think they're always going to get saved. They think it's always going to be a bailout, and what they're not realizing is, and I think that was and that's why the VIX at 18 is really confusing to me. Basically, Warsh has basically told, he said at the first meeting, the Fed does not have your back anymore.
Hmm.
We talked about it a little bit in the room. I don't know if you were there. It's basically he basically turned around and said that when it comes to the markets pricing out financial assets, they're going to do it according to information. You know, they're done. The Fed does not have your back, like at all. But yet, volatility is not moving. You would expect that normal volatility. I know this is going to sound weird, but you would expect that volatility at this juncture should be sitting in the mid 20s, and not because the market's flying all over the place because there's fear, but just as a pure function of being, 75, 7,600, 7,600 handle. Just being that kind of instrument, it should be living somewhere over there.
Hmm.
This isn't the market where volatility is basically trading right now as if the market was 2,000, 2,500, 3,000. That's what the market's
I see.
trading at. If you think about it, really, it should be double where it is right now, and not because there's fear, just because of normal vol. If you look at the straddle on a daily basis, the straddle price is nothing, literally nothing. You get 50 handles, what's it called? 30 handles at times. Maybe once in a while you get a 60 handle. How is that even remotely possible on an instrument that's moving on a daily basis 1.5%? And
Right.
volatility is not even accounting for any of that. So the whole thing is just backwards. I'm saying it's broken. That's why I said broken, completely broken, broken. And what that
So,
tells you is that there's just no respect for risk, zero. That's what it's telling you, because they just think that the market just the market. Excuse me. The market's going nowhere. The market doesn't have any respect for risk, and there's no downside. They just don't think there's any downside. So that's kind of your volatility backdrop. Even before you get into the macro, just to understand where are we. I mean, the NQ is moving, or even tech here. The Qs on that day where we moved 5% moved like
yeah.
$24. They don't move like that. The Qs never move like that. So you have all these extreme volatility movement, yet volatility as an instrument is not going anywhere. So it's not even, but it doesn't even really matter what the macro is, because right now the market just does not have, it just doesn't care. Like I said, it believes that it's always going to get saved. Like no matter what, it just always thinks we're just going to be saved. And that's very dangerous, because you saw it with Bitcoin. They thought they were going to be saved, they're going to be done, and they're all suffering in Bitcoin now. They're all suffering.
Mhm.
So it's kind of like the same kind of backdrop. Now, I know that doesn't fit into macro, but it gives a better understanding of, because at the end of the day, we're traders. So when you're looking at things, you're trying to gauge: are we moving? Are we not moving? Like, what are we doing? And volatility is giving you nothing. Now you could say zero DTE messes with it, but zero DTE really doesn't, because zero DTE is purely an alpha generation product, because it just basically goes from 100 to 0 every day. That's what it does.
Mhm.
Now, granted, I'm using that's really what it's doing. So it's not affecting 30-day volatility. Now, I'm sure that plenty of people are going to get up and probably complain and say, "Oh, it's not true. You don't understand volatility." Blah 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 blah. It's not true. Volatility is a measurement of puts and calls, because that's really what the VIX is. It's a mathematical equation. Nobody's pricing in any volatility. They think that the market is just going to constantly be saved. That's just the way they're pricing it, constantly. So when you get like a situation where the market really implodes, you'll notice volatility doesn't really budge, because they don't know how to. Nobody really knows how to trade it. Like there's nobody in right now in the market, unless you've been in the markets for years and decades. There's nobody who really understands how to trade volatility anymore, because you're not getting that kind of movement, which basically tells you that volatility is a measurement of, or the VIX is a measurement of volatility, is kind of worthless and useless to look at. So you have to go other places to look. I know I digressed a little bit, but it's just giving a little bit of an idea of what is happening. Because when you come in tomorrow and you're looking at an S&P that's sitting at, let's just say 7,600, and volatility is at 18, that doesn't, just common sense, that doesn't make any sense. It's basically trading in the same spot it was when S&Ps were at 2,500 and 3,000. How does that make any? That doesn't make any sense. And I'm not saying it doesn't make any sense that it should be flying, but if at 3,000 it was 18, then logically at 6,000 it should be at 30. It should be technically double, or somewhat double. And if you're trading almost 8,000, sitting at an 18 vol, that doesn't really make any sense, because inherently, the more expensive something gets, and I'm not talking about in terms of PE ratio, just from a dollar perspective,
Mhm.
inherently, volatility takes over the thing. It moves differently than, an $8,000 instrument moves a lot different than, let's just say, $100 instrument. The Qs, or the NQ, which is, almost 30,000. Well, now we're gapping 200 candles, whatever. Let's say 30,000. It moves very different than S&Ps, which are trading at 8,000, or whatever, 7,600. There's a
Right.
different volatility characteristic to it. So you're just not getting that. You're not getting that. So that's what I'm saying is it's broken because it just doesn't give. It's not giving you what you need in order to measure what's going on.
So I'm not super familiar with how the VIX is actually calculated. It sounds like it's a base calculation that should factor in price of the S&P 500. So naturally,
No,
as
no, no, no,
you're saying,
no. It's a
no,
measure of puts and calls. It's a measure of
puts
puts
and
and calls.
calls. Okay, so I heard you say that earlier. So what does puts and calls have to do with the price of the VIX, or the volatility? Yeah, basically the price of the VIX needing to go up at would you say it's a 1-to-1 ratio as
No,
that?
no, no. But you would expect in an environment where you have an $8,000 instrument that's moving around, you
Uh-huh.
would expect that volatility would be moving somewhat around. That way you have some kind of measurement of what is actually happening. That's what you would
I
expect.
see.
You would
I see what
expect
you're saying.
that as the instrument goes up, the volatility goes up just because of the fact that it is an $8,000 instrument. That's what you would
Gotcha.
expect. Plain and simple. That's what you would expect, but you're not getting that.
And because it's not, that tells you that people, the market, the pricing, whatever, whoever does that stuff, they're not necessarily respecting the risk to the downside because they believe it's only going up.
Right.
Is
Correct.
that what you're saying?
Yes.
Gotcha. I'm gonna have to learn a little bit more about the VIX and how that is calculated, puts and call wise. I don't, admittedly, I don't look at the VIX very often. It's just another
All
thing I
it's
got to
telling,
look at in a short period of time at work.
all that it's telling you is that right now, nobody has any respect on the outside. Zero. There is no respect. Zero. Zero. Absolutely zero.
How do you use it as a tool? Is that it?
Well,
You just
you're
kind of use
looking
it
at
as a
it.
reference gauge, or how do you actually apply the VIX
Well,
to trading?
you're look. Yeah, you're looking at it as a way, not necessarily for shorts, but you're looking at it as a way to understand where are people complacent? Are people Is there fear? Is there not fear? Like, is the market moving in a way that is a little bit more aggressive on in any which way possible, so that if you get an aggressive move down, your expectation would be that the VIX would move up because the protection kicks in. But
Hmm.
what ends up happening is, for the most part, is that because everybody doesn't believe that markets could go down, when you get the VIX, well, I'm sorry, when you get the market going down, they're buying puts left, right, and center at the speed of light. And then when everything stabilizes and we start to move up, they want out of that protection so badly that they get out of it 4 times as fast as the way they got in. Everybody's basically max long to a large extent. They always think they're going to be saved. Because they always think they're going to want to be saved, they're going to be saved. They just basically, to a large extent, just let things roll.
Hmm.
So it makes things complicated. It just
I
makes
see
things
what you're saying.
complicated.
With that being said, I
That
think it's Warsh seems like he's kind of more of a free markets guy. Let the markets land where they may. Am I right on that, or am I wrong?
for now, for now, we'll see how long
Yeah, we'll
before
see.
Trump starts
Yeah,
calling him an idiot and a moron and a stupid person and all these other
right. Because it
fun
doesn't
long
even
fun
say.
things he likes to say about people who don't do what he wants.
Right. Throws little temper tantrums.
But the funny thing is that he keeps bringing these same types of guys in. So
Hmm.
like what does he want? Like he keeps bringing these guys in. So you tell me.
Maybe he just wants the drama.
It could
I
be.
don't know.
It could be. But I'm just saying, it's like he keeps bringing these types of guys in. He
Right.
hated Powell. He brought Powell. No one else brought Powell. He brought Powell. So but right now War's just too busy with committees all day long. So we'll see how long it's going to take. Right now his thing is committees, but whatever.
Yeah. Or what they did he call them committees? Is that what he called them?
Yeah, he's busy with committees all day long.
Yeah. Trying to get his teams organized with his 4 different sections and whatnot. It sounds
Listen,
interesting. I don't know how that's going to play out, but
agreed.
I don't know.
Listen, if
It
he can
sounds smart.
if he can reshape the Fed, then we have a different situation going on over there. I doubt it, but we'll see. We'll see.
Good.
We shall
So
see.
overall, nothing has really changed too much. Market backdrop wise, we're at the 50
No,
EMA SPY. We're at the 50 basically. We're a little above it, but basically at the Qs. What now? We're gapping up 200 points. I mean, you
which
bring
doesn't
up
really
Bitcoin.
matter. Which doesn't really matter. You bring this up, and I want to jump in for a second. It
Yep, yep.
doesn't really matter because you'll notice that we gapped up Friday and then we sold off hard off the open.
Right,
So
right.
I don't think you can give any credence whatsoever. As I know that a lot of people are going to be very upset about this. I don't think you can give any credence to what happens at 6 o'clock. I think it's meaningless. I think you need to wait until the stocks actually open at 9:30 in the morning, New York time. That's when you'll know if it's real or not. I think anything before that, I don't think it's not only do I not think it's real, I think you're selling yourself short because you're going in assuming that things are going to happen. And we've been seeing these kind of like gap ups and then they get sold off and Friday morning, it got sold off hard. It wasn't just
Yeah,
sold off
I
any,
know.
it
I
was sold
saw
off
that.
hard.
Did you
So
catch anything on that? I hope you did.
I did, but I wasn't so active because at the end of the day, my week was already pretty much over on Thursday. I had a very, very good week this week. So Friday was, I'm of the belief that if things are going very, very well and I'm having a really, really good week, the last thing I want to do is mess it up on a Friday.
Oh yeah, for sure.
So,
Don't ruin your weekend.
so I basically just said, I basically was not really, I wasn't so involved just
Yeah,
because of the fact that, I hit targets already, targets and then
smart.
some, you know, like I always say,
Yeah,
it's not about how much you make, it's about how much you keep.
absolutely.
You have to be in the
Yeah,
market
I
every five
agree.
seconds.
I mean, that's during RTH. That's when you're right. That's when you get the measure of whether things are real or not. Because at that point in time, you're not even. You've said this time and time again. The names that actually move the market, they're not even available. Right? They're not even trading, and so this is just based on pure supply and demand on, I guess, the contracts themselves. When the names that aren't even that actually move these things are not even open to trade, and so when the names that actually move the futures open up, that's when you get your real, whether it's real or not.
Yeah, I mean, listen, you're allowed, as weird as this is going to sound, you do have the 24/7 trading, but that's not really affecting anything.
Yeah.
They'll move. Futures can get ahead of the cash market, overnight. It's when the cash market opens and everything is really opening and really open, then you really understand like what's going on. Before that, everything else is just kind of like, yeah, whatever.
Speaking of things that don't matter, I geopolitical stuff. I
Yeah,
don't think I don't think any of this news really matters on number one relative to the actual move that we're getting here overnight, because we just said we got to wait till till RTH opens up and to see what actually happens when the market is opening. But also this whole U.S. Iran memorandum peace deal thing, I don't trust any of it. It's
it's
so
over already.
volatile, right? Oh yeah, yeah, yeah. Just come out like an hour ago. They have agreed that they're not going to escalate anymore, and then they're going to meet this early this week. I think on like Tuesday or something like that, right? Either way, it's a headline. I don't believe it. I don't trust it. I think we're going to be. They could potentially be shooting at each other within the next 6 hours, for all we know.
Mhm.
And I don't think the market cares. I don't think it really reacts on this. I think we're
Market
getting a
doesn't care
good
anymore.
gap. Yeah,
Yeah.
it literally doesn't care anymore. The only
Yeah.
thing that it really cares about, I think that's propelling it for, is AI trade and semis, as we've talked about in the past. And I don't know, geopolitical wise, like, is there really anything else? I don't think there is, unless I'm obviously could be missing anything. But am I?
At this point, no. At this point,
Right? Macro
I mean,
wise, I mean, we could always talk about credit and credit card debts and the housing market and things like that. But
market
does the
doesn't
market
care.
really? Market
Market
doesn't
doesn't
care
care.
about. What
Market
does it
does
care
not
about?
care.
What do you think it
Right
cares
now,
about? Yep,
nothing.
just up.
Just up. And you see it in the way that the Dow is being reconfigured now. They're kicking out Verizon and replacing it with Google. Why?
Wait, what? I didn't know that. Why?
Yeah,
I don't know. You tell me.
they're kicking out Verizon and putting in Google into the Dow.
Mm, hang on. Verizon doesn't move enough. Dow doesn't move enough, and so they're putting in a mover to help
They
move the
want to
Dow
prop it
up.
up. They want to keep
Yeah.
it propped up.
Yeah. Okay.
There's so much tech right now in the Dow. It's like it's like a mini NDX.
Isn't that kind of the opposite of the meaning of the Dow?
The whole
Dow,
that's what
yeah, Dow's not even it's not supposed to be a tech instrument.
that's why,
Correct.
by the way, Dow theory doesn't work anymore, because
Yeah.
the Dow is not the it's Dow theory is based off of an industrial. It's not industrial
Yeah.
anymore. Look what's in it. Nvidia's in it, Google's in it, Apple's in it,
I
Microsoft's in
actually
it.
don't know. Yeah. So what'd you say? It's a mini tech? That's what it sounds like.
Yeah, it's becoming like a mini. It's like becoming like a mini NDX.
How's that even? Why are they doing that? Literally, just have they? Is this
Keep it
new?
propped
Have
up.
they been? Yeah. Have they been restructuring it recently? So like, how long has Nvidia been in it, etc.
Well, Nvidia's been there,
You know?
for a while. Nvidia's been in for
Okay.
a while. They basically treat it as though they treat all these indices the same way. They're going to do whatever they can to keep these things up. That's why the equal weight makes so much more sense,
Yep.
because it's not really being affected. What's interesting, what I've been reading that's been very interesting, is that Tom Lee has been very bearish recently. And
Has
he
he?
is a perma bull. He is a perma bull. And he is not saying he has an $8,000 price target on the S&P by year end. He
Mhm.
believes we're going to get there. He just believes that the summer is going to be incredibly rocky. Like, he's expecting like a big pullback. I forgot the percentage that he's looking for, and he is never bearish.
I'm not
And when
aware.
he's
I'm not
bearish,
aware.
yeah,
What percentage is he
I forgot what
saying?
he was. I forgot what he was saying.
20, 30 plus?
I don't want to quote it because I don't remember.
Sure. That's fair.
I don't want to misquote him, but
Let's see if I can find it.
see if you can look it up. I mean, he has been calling for a downturn.
Summer
Excuse
explodes.
me,
Not bad.
which is very interesting, given his mo, and his CV is basically long only, and it's just and always he's a perma bull, and the fact that he's acting and talking the way he is very surprising.
I see posts about it. I don't see anything. It's all, I don't see any specific numbers. Anybody quote? I just see a video. Not gonna play a video now. I'll have to watch this though. Thanks. I don't know. I mean, he's been getting crushed on his, was it BMNR?
He's been getting crushed on his ether call.
Yeah,
He's been just getting
Ether.
destroyed in it.
Right. Would there be any reason why would becoming bearish
No,
help that in any way?
no, not at all.
Okay.
He was just wrong. What I think is interesting, I don't know if you saw this article. I don't know if you heard about this. AOC was in the news today. It was today or yesterday
What did I
or
see?
last night. But she actually brought up something that she may actually gain some traction on this.
Great.
I'll be honest. And usually I don't, I don't pay attention, but this is something that she brought up that actually she may gain some traction on this. Basically, you saw on Friday that Apple's raising. I think it was Friday that Apple's
Oh,
raising price, or Thursday Apple's raising prices on iPads and I think Macs
right.
because of the
Yep.
RAM.
Yep.
Okay, so she's calling for an investigation by the DOJ into Apple, Microsoft, Google on their monopolies
To break them up.
to
Right.
break them up, to break them up. And by the way, excuse me, she's not the first one to ever bring this up, but because of the way that Apple made the announcement, and I listen, I'm not blaming Apple. Cost went up. I get where they're doing it. It's just it put a target on their back.
Mhm.
And listen, when Europe put a target on their back, Europe eventually won. I don't know how this is going to play out, and I'm not going to speculate. But I'm just saying is, if there's one thing that could jostle tech, is if these guys are now in the crosshairs, which they always are, but now it's becoming a little bit more public. And like her, don't like her, she has a huge following, and
Yeah.
the last thing you want is her not on your side.
I could see that pulling tech down, especially if that gets momentum, like you're saying.
Yeah. And there's no catalyst because we end the quarter on Tuesday, and then earnings are in about 2 weeks. And
Right.
then tech earnings are in 3 weeks, 3.5 weeks, whatever.
Yep.
So really, what's to keep stocks up here?
I don't know. I mean,
Nothing.
you talk about yeah, especially with where money rotated this week in basically healthcare, utilities, industrials,
Right.
semis. They're starting to get hit a little bit. They're still, they look okay overall, but it wouldn't be bad if they at least cooled off and chopped a little bit. Yeah, I don't know what would continue to propel tech forward, or even really the market at this point in time.
Well, keep in mind that in about a week, the blackout period starts because of earnings. So the buyback machines are turned off.
Oh,
So there's
wait,
no
the
buying.
blackout parade? What is that?
The blackout period.
Oh, period. Sorry. Okay.
Basically,
I
because earnings are coming, they have to turn off the buyback machines. They're not allowed to buy. They're not allowed to buy in front of it. Why? Instead of trading, so they have to turn them all off. So
wait.
because
Hang
that's
on.
happening,
Say why again? Say why again?
companies are not allowed to buy back their shares when earnings are coming.
What's
Like
the time frame of that?
I think it's like 2 to 3 weeks,
Oh, okay.
something like that.
I did not know that. Well, then that makes sense.
Primary
Why? So
reason
they can't prop
is
it up
yeah,
or
because
run it up?
it's basically insider trading because they know the earnings, they know it's coming.
Yeah,
So there's a lot of legality. It's just a rule. You're not allowed. Plain and
that's
simple.
fair. Yeah.
So every earnings season, like 2 to 3 weeks before, and the buyback machines get turned off. They have no choice. They have to.
Oh, okay. So we're okay. Would you call that a blackout period?
Yeah,
Okay.
that's what it's called.
I've literally never heard of that. Cool. Um. Well then, yeah. Well then, what the heck? Like, we might have a couple
Then we just
boring
chop around
few
now.
weeks. Yeah,
Yeah,
chop around. Wait till earnings to come and to see if there's any catalysts. Really,
pretty
like that's
much.
kind
Yeah,
of it. Geopolitical stuff. Market doesn't care about U.S. Iran war really anymore when it comes to RTH. Um, I feel like we're not really missing anything else based off of
I
that.
mean, I think the biggest thing that's hurt the most people has been oil. You know how many oil guys have gotten crushed in this move, destroyed.
On the downside, what
Yeah,
were they long?
And they're long, yeah, and they're not wrong. That's the whole thing.
Jeez.
They're not wrong. They're actually not wrong, and they're just getting smoked.
Is it the whole idea that the amount of disruption over this period of time is very real, and there are legitimate supply chain issues, but it's just simply not playing out that way right now?
I mean, right now you're pretty much hitting the nail on the head to a certain extent.
Mhm.
I mean, but we're not necessarily there. We've got another couple of weeks before we get there. But I think the way this plays out is I think the market's going to act as if it didn't know this was coming. That's what I think. I think we're going to have one day where oil is up 25, 30%. I know it sounds weird.
Whoa.
I do. I think there's going to be that type of day where it's going to be up 25, 30%. And not because of I told you so, because I think the market is treating it as if it doesn't know. And then when it
Gotcha.
comes, it's gonna start acting like what the hell? Like where did this come from? That's really the way I see this happening. Because other than that, everybody knows that inventories are basically the toilet.
Yeah.
Everybody knows this. Everybody knows that Hormuz is closed. Everybody knows there's no that there's no free flowing oil. Everybody knows all of this.
Yeah.
Yet we keep going down, which is fine. You want to go down? We want to go down. Fine. I'm just saying that I've seen this movie before, and I've seen it many, many times over my career. And, excuse me, where the market will just all of a sudden explode higher and everybody be like, "Oh, what happened? What happened? What happened?" And it's not like you want. It's not like you want to have an I gotcha type of thing. Like say, "Oh, I'm right." No, saying is we just do the same stupid thing over and over and over again. We do it with commodities or we'll do it in stocks. We do the same stupid thing over and over and over again. And that's exactly what's going to happen here. And I'm telling you, it's going to be a ginormous move. And everybody's going to be like, hold on a second, where did this come from? And it's just going to be because of the fact that no one's paying attention. It's just that's what's going to happen. Plain and simple. And when that happens, I don't even think this, I don't, the worst thing is stocks don't care. They won't go down.
Right.
So it doesn't matter.
I find
What's
it
been the worst?
interesting that, like, it seems obvious, especially if you read all the smarter individuals within the commodity world. They point this stuff out, and you talk
Jeff
about it
Curry has been
endlessly. Yeah,
Jeff
endlessly
Curry
in your
has
group.
been slamming the table on this, and no one's listening.
Yeah. So what do you think is with that? Because if it's as big as a problem that it seems like it could be, it's potentially, theoretically, potentially going to lead to this huge potential gap up 20-25% or so. Why does the market seem to be ignoring it?
Because I think Treasury, and this is very much a conspiracy thing, but I think Treasury is there shorting oil futures
Yeah.
aggressively. I think they're aggressively shorting oil futures. And because of that reason, they're keeping it down. I mean, I don't want this to be a Trump bash, but it's not. But it's very obvious that Treasury is doing it because one of the main things that happened on, I think it was Thursday or Friday, that he
Mhm.
wants to have a DOJ investigation into why oil prices are not going down. And he's going after Exxon and Chevron and
Wait,
Valero.
what?
He's going after all of them. And that's how you know right away, okay, something here is not right.
Yeah.
Because of the fact that he's so aggressively going after them. We've talked about this beforehand. It kind of works this way. When oil prices go up, it's about 2 to 3 days for prices to react at the pump.
Hmm.
When oil prices go down, it takes about 2.5, 3 weeks. It's just the nature of it. Not because they're trying to kill anybody, but
Sure.
just because they got to cycle through the inventory. So it's just much harder to just kind of, you know, maneuver things. That's really what it is. It's not a conspiracy theory. It's not people out to get. That's just the way it works. And
Right.
everybody knows it. It's not a big deal. But the problem that I think everybody's having, and this is where most people who don't understand this are missing the point. They're looking at futures. They're not looking at the physical, which is the physical asset. The futures are the paper asset. The paper asset could be significantly lower than where the physical is trading. The physical is significantly higher, which means that the price that you're seeing quoted, for WTI, which or really or more Brent, or even RBOB, or is not the real price that the refiners are paying. So there's just a lot that goes into it, but
Hmm.
whatever. If you
Well,
look
I
at
mean,
which sector has been really suffering the most since this, it's been energy. Exxon and Chevron,
right.
they look like shit. They have not been
Oh, yeah,
trading well.
they look
Valero,
terrible.
Marathon, Duke,
VLL
they
looks
have,
pretty good.
huh?
VLL looks pretty good, but
That's
you're
because
right.
margins look amazing, but as an overall group, they look like crap.
Yes, I
Conoco,
agree.
BP, they all look like that. I'm not saying they look like crap, but the charts look like crap. They have not reacted well at all. They got their initial pop, and then that was the end of that.
Right. I mean, that would going with the thought of potentially treasury shorting. Um, future shorts are buyers, right? Or shorts are future buyers. So that can add into that gap up
Yeah,
as well. Yeah,
but
to an extent. Am I wrong on that?
yeah, I mean, listen, they're going to be the buyer anyway because they got to refill the SPR, so they're going to be the floor at some point.
Gotcha.
But again, it's very difficult to play commodity games in the media. I can't stand when he does it. I hate it when he does it. He did it during his first term. He's doing it again. It just whatever. But I don't want to. I don't want to. I don't want to. Let's not focus on that. Let's move on from that.
Yeah, for sure, for sure. Well, since we're on commodities, what are your thoughts on natural gas moving forward here?
I think it's going to depend on, and this is really where you start to pay attention to names like Cheniere, KMI, which is Kinder Morgan. You
Yep.
start to pay attention to those guys,
They're
especially if you're
looking
not
pretty
trading the
good.
commodity.
LNG looks great.
Yeah, yeah.
It's turning
Because you
around.
have you have now hurricane season. You also have summer, which again, more electricity demand because of what's it called? Because of air conditioning, propane for barbecues,
Hmm.
fertilizer. It's just used. There's a lot of use cases for it. So it's looking good. The only problem is on the future side. It really isn't doing much. I mean, as you know, it's been trapped in the first 2 week pivot. It just
It really
can't.
has.
It just doesn't budge. And I told the guys that I haven't been trading it that much, and I basically told the guys, I said, you have to wait until it gets out. Once it
Hmm.
gets out, it's going to be a rocket ship, and we know because we've seen it. But until that happens, you just got to wait. So I just been basically ignoring it, just because it's too much like a heartbreaker right now.
Yeah.
So like I think you just have to have patience, and eventually it's going to go, but you just have to have patience with it.
Right.
So
If it's
it's
not in
like
play, it's not in play. You just move on
right.
to the next.
Right. Like there's other
It'll have its
markets that
heyday.
are moving, that are probably better places to be. Depending on if you want to do equities, you want to stay commodities, you want to go mix. What do you tell me what you want to do? Where do you want to go?
Well, let's talk. Let's stick on equities, or I'm sorry, commodities for a little bit. We'll move on to equities in a tad. Let's talk about metals, though. We've been talking about energy for a good amount of time. Let's talk about metals. Were
I have no
you
shorts on. I
okay?
have no position on the metals. I believe that gold is going to be at 3,800 or below, and it looks like it wants to get there. And it wants to get there in a hurry.
I mean, it has
Um,
been getting absolutely smoked. That's for
yeah,
sure.
it's the unpopular opinion. I think silver by the end of the year is going to be a five, like 50 or lower.
Yeah.
I think next year it's back to 30. Um, I know the gold and silver bugs are going to be all upset. Oh, but at the end of the day, there's no utility for it. So that's just where they're going.
Mhm.
You can like it, you can not like it. It's an opinion. I mean, we all know about the most famous gold guy. He's correct every 10 to 15 years. He's right, and he's right in a big way. But
Yeah.
he's only right for that time period. The rest of the time, he's going on and on and on about bubbles and this and that and that and that. And if
Right.
you listen to him, you're not making any money. You know, so I think copper's following the stock market. So as long as that kind of stays, FCX still stays in play. A little bit harder just because it has the gold aspect to it, and gold's not really doing much.
Right.
And they're not really moving as much as they were. They were, at one point, SLV and GLD, the options were so off the charts. I mean, there were times where SLV was doing record breaking option activity. I mean, they were talking about, there were times the ETF itself was doing, a half a billion shares. The last time
Hmm.
you saw anything do anywhere close to that was when the banks were getting out of Dodd-Frank. That's when that was the last time you saw that. 2011 was the last time you saw volume like that. But you were seeing that kind of volume. That's gone now, completely gone.
Oh yeah.
I know it's completely gone. There's just no interest in it anymore. Where they're sitting right now is they're going into SanDisk and Micron. We'll get to that in a minute, but that's really where they're going. So, like, everything becomes a meme, so they just have the massive volume, which kind of surprises me that they never got into USO. It really shocks me, because if I feel like if those maniacs would have gotten into USO, oil would have been $200 easy.
Yeah, that
And
was
I was
a problem.
kind of banking on that, and that never came to fruition. They never took to it, never, which is really weird, because you would think that they would have, but they just never ever. The maniacs never got in there. Whatever.
It'll be the forever unanswered mystery on why that did not happen.
Yeah, yeah.
Would have been
I mean,
great volatility.
the rest of commodities are basically doing what they're doing. Grains are kind of like in sleepy land. The softs are definitely moving. Coffee's starting to roll over a little bit. Cocoa holding above 5,000. So my original
Mhm.
target was 48. It's at 5. It got to 52, which was kind of like, wow. So that's moving around a little bit. But they're pretty quiet, considering. I think that the most volatile thing on the planet right now is tech. And I'm not just saying NQ, I'm just saying tech is that's probably the volatility. And as a trader, especially an intraday trader, or like someone who's looking for real move, you're kind of forced to go there. It used to be oil was the most, at least in my day, when in the pits, oil was the most volatile thing on the planet. Before that it was silver. Now it's basically tech. I mean, and that's where you kind of so it forces you to go there, which honestly doesn't matter, because who cares what the ticker is? But your
Yeah, for
hand
sure.
is kind of forced, because you just need to be where the movement is. Because the reality is, at least for most intraday traders, you don't have time. There's only a limited amount of time that you have available. So you got to go where the movement is. If it's not there, move on from it. And this is someone whose energy is my bread and butter. And I'm telling you, I'm just, I have
Hmm.
not been there that much this year. It's just not really giving the opportunities. It's very sporadic. You can't really count on it. You can't bank on the moves. It does a lot of its movement, during Europe when Brent is open, and then it kind of just dies. As soon as New York opens, it just basically dies. We've seen it every day. So there's really not much going on over there. So really, your hand is kind of forced. So you go where you got to go.
That's very true. So if you with semiconductors, the potential. So looking at the stocks, right? We all know that this has been moving equities forward. It's been moving the markets forward.
Yep.
We have Micron is out of the way. That got hit on Friday after gapping up like another 15% on it, on earnings, that is. And if money starts to circulate, starts to flow out of semiconductors, you got a pulse on where that might be?
Where does the market go from there if they start pulling their money out
No.
of?
No. So I'm in the camp of this bull market is not dead. I'm in the camp of the rotation keeps bull markets alive. And I think I see that rotation still. Um, you can see it in the sectors, right? I have my bias, but I'm curious on your thoughts on where, when money flows out of semiconductors, because there is looking at the stocks. I'm just going to go from the most recent low. I got the chart. Do you have your charts open by chance?
I don't. I'm gonna listen to you, because I pretty much know them. I know them backwards and forwards. So
Yeah. So going from the low, 57 days. We've had 61 trading days, but the high was made on day 57, 114%. in 57 trading days. So you would be
I'll open them
pretty
up while you're
crazy
talking.
to not ring the register on this, especially if you're a large fund, right? Like that is great money.
Well, first of all, it goes back to what we've talked about. The participant is not the fund. The participant is more mom and pop guys, and you get what's it called? Citadel and Jane Street pushing things along.
Mm-hmm.
That's who your participant is. So the funds are they'll do smart money or whatever funds will be moving things around all the time depending on allocations, because again, there's only so much they can have exposure to one specific sector, one specific stock. They just can't do that. Like it's not portfolio management. The portfolio management, your book is long short, you're in stuff, you have things going on. You can't just be just sitting in one thing. That's just not the way it works.
Right.
So it's really who's pushing us forward. And I will say this. If they decide to get out of the stocks and they decide that they're done with semis for right now, which they're probably not going to be done for a while, but let's say they
Mm-hmm.
are, we could see a big move down, like a really, really big move, like a 35% move. We could see a ginormous move. And I think that would put S&P cash. I don't know what the math is. I'll let you'll tell me. I think it puts S&P cash back at 7,000, back to that breakout level.
You're talking S&P down 30-something% move.
I think we could get there. I do. I think we could get there. Here, let's just do the math. Here.
30% off its highs. Yeah, hang on.
No,
yeah.
not off the highs. Even
okay.
from where it is right
What
now.
are you talking about? Oh, okay. So that's even worse.
Hold on. Here.
Hang
right
on,
now, 73,1979. Okay. So this times 10%. Oh, 739 points. Okay, that would be what's it called? Okay. So if you did a 10% move off the high, which is 76.20, right? So 76.20, 76.20.90. Oops, 0.90. Let's do 35%.
That brings you down to like 55.
That's too much. No, that's too much. That's too much.
Yeah.
That's too much. That's too much.
I can see a retest of the breakout. 8.5% or so, down to 7,000. That would make sense.
I
or
think
even
we would
the
get
200.
down. No, I think the 200. I think we would get down to the 200.
That's about 9.5.
Yeah, I think we get there. And you get to overshoot, so you get 10%. I think that would happen.
I think carrying forward, like, still one of the most valuable things that you have taught me to look at is percentage moves down. How far away it is off of all-time highs, and when the algos start to turn on at those specific percentage points.
Let me interrupt you for 1 second.
Yep.
I think that if things got really bad, you could get the gap fill.
Whoa, from 67.50 to 66.15?
From April 7th.
Yeah, I see that.
Gap fill.
Yep.
I think if things got really, really bad, you could get that gap fill.
Are you referring to oil spiking and money rotating out of semis all at the same time?
I think you have. I don't know what's going to be the catalyst. I'm not sure.
Yeah.
It could be the midterms. It could be anything. Honestly, it doesn't matter. But I think that you could see it. I think you could see it. You could really see it. And I think this whole depending on how badly she goes after big tech, it's going to be interesting. It's going to be interesting. Now, granted, we're up, over 1% today. Whatever tonight, that doesn't really matter. But I think if she really goes after them, AOC, that is, if she really, really pushes and really goes after them, it's a different ballgame. It's a different ballgame.
I just saw something. She's doubling down. So it sounds like she's going to.
Yeah, I mean, look at Micron. I mean, why is Micron up here? I mean, it just doesn't make sense. Like, who's buying this? And I'm not saying it because I'm short. I'm talking my book. I'm not. I'm just saying it's like I understand that DRAM is an issue. I get it. I
Hmm.
spoke to someone about it. I'm very very well versed in it. But some of these things have just gotten so ahead of themselves.
Right. I was listening. So they have on their earnings call, they had deals that are going out for 5 to 10 years, right?
Okay.
On some of their whatever companies they got those deals on. And so I was listening to some other thoughts prepping for the week. And basically what they were saying is the market's trying to price out that far in advance. I don't know if I buy that fully because that is a very long time in advance.
Especially
Um,
for tech. Especially for
yeah,
tech.
for real, like that kind of gave me like rang my yellow flags a little bit. But overall, the gist of it, like I can understand if they don't have that money coming in just yet, but they have deals coming up to the future, especially with AI revolution going on, industrial revolution for AI, whatever you want to label it going on. It's going to be very hard to actually appropriately price these stocks because number one, we don't actually know what the future is going to be. It can be we might need a lot more chips or memory, both, or we can overshoot and we might actually need a lot less, especially with recursive self improvements with AI. And so it basically it's super hard to reprice these names and they have gone so far so fast, and I think it's all based on AI. Like I know you say you don't really understand, it doesn't make sense. I agree with that. Like it doesn't make
I,
sense price wise how it can do this, but it's all betting the future on AI and what's to come and people trying to position as best as they possibly can for the future. Agree or disagree?
I agree. I agree. But I think you have to look at it from a little bit of a different vantage point.
Sure.
Um, I think you have to look at it from because I actually had this conversation with someone the other day.
Good.
All of these companies are very .com like, but hear me out a second. They're not .com like in the way that they're trading. Leave that alone. But if you look at the original .com stocks, and I'm not talking about pets, I'm talking about the original, Sun Microsystems, Lucid Technologies, all those companies. Those guys were like the bricklayers of the internet, all of them. And what happens? They were very in demand because all these fiber optics and all this stuff that was being used to lay the foundation for the internet. That stuff, those stocks all went to the moon. However, once the bricklayers had finished laying the bricks and everything was done, you don't need those guys anymore. And then
Hmm.
all those companies went, those stocks came, they didn't just come crashing down. They basically went to free fall. Some of those companies went out of business, you know. So I think you have to kind of look at it in the same way with some of these other companies that where things have really, really exploded. Like you look at SanDisk, okay, and you look at let's say micro, Western Digital, or you look at
Yep.
MU, which MU used to have crucial memory.
Yep.
I'm not saying that these companies are going out of business. That's not what I'm saying.
No,
What I'm
no.
saying though is that they're being priced for in such a fashion that when it's finally over, they're going to go into free fall. Now that doesn't mean blindly short them, and that doesn't mean okay they can't keep going up. I'm not saying that. I'm just saying is you have to put context to it. The context is that for now they want to go up. Fine, don't fight it. They want to go, let them go. But once they've kind of quote unquote finished their jobs and the bricks have been laid, so to speak, then they go back to the businesses that they normally were, and the stocks are going to get annihilated, like literally
Hmm.
annihilated. Now you'll think it's an annihilation based off of where they are, but it really will just put them back to where they were before the stupidity all started. If you look at SanDisk, okay, you pull up a weekly of. I'm just looking at SanDisk right now. You pull up a weekly of SanDisk,
Yeah, same.
or even a
Yep.
monthly. Okay, but you look at just a weekly. Okay, outside of I forget about 2026, the stock was basically living for the most part, for all of 25, like $160. Got to 200 or whatever. that's pretty much where it was.
Sure.
You look at Micron. Let's do Micron because that's even more interesting. You look at Micron. Pretty much all of 25, the stock was out. Did not get much farther than 130, 150 bucks.
Right.
It got to like 130. And that was it. In 2024, it got up to 157, and then all of a sudden, it's just the thing rocketed. I'm not saying that it doesn't deserve it. That's not what I'm saying. I'm just saying if it has to come back down and it has to come back to Earth, where is Earth? Is Earth $500? Is Earth $200? Where is Earth? Because
Yeah.
eventually it will come back. If you're looking to play it, you're probably gonna get your clock cleaned trying to do this, trying to short this. And I'm not a believer in the whole I'll just buy puts and that's the end of it. Because in reality, yeah, your risk is premium paid, but really what are you doing? You're basically, treating this like a casino. And that's really what happens. You're just basically putting quarters into the slot machine and just, bet it, and hopefully that this thing works. And that's not trading. That's not the way this business operates. Now, granted,
Mhm.
it's definitely changed. A lot of it is like this now. I mean, I'll be the first one to admit it. The stock market at this point in time is not a risk. That when you're in college or you're in grad school, you learn about you know riskless investments and what is considered a risk investment. Stocks have always been risk investments. They're no longer risk investment to a certain extent. As silly as this is going to sound, to a certain extent, they're basically riskless like a treasury. That's really the way they are. It's like a high yielding savings account, which is insane to think about it like this. But that's really the way it is. And that's why when stuff goes down, you know, people always think they're going to be saved. So they just, they don't open up their computer. They don't look at their statements. They just don't care. So it makes things much more complicated. Not necessarily to say I'm a frustrated short because I'm not at all. I may sound like I am, but I'm not. I'm just trying to think in terms of common sense. And common sense tells you, you know, things can't keep going up forever, but somehow or another, some of these things they just keep going up forever. So it makes things complicated. I know a lot of guys are trading the SOXL. A ton of guys are in there. I mean, it's been a sloppy, choppy mess pretty much the entire June. If you
Yep.
look at it, and so right now it's not the same trade that it was from, let's say, April going into June. Completely different trade now. It's been a sloppy, choppy mess now. You know, so it's like, where do you go now? So like there's certain things like what were we looking at? I was looking at HIMS last week that popped out, that broke out, that had a pretty interesting move. So I was looking at something
Yeah.
like Dash.
Yeah. I was
Dash
just
had
going to ask if you had any. Let's move on to equities. Yeah, if you're looking at any equities specifically in this coming week, I got a list of them. We can go through, and then simple swings. Also, welcome to joining. If you have any questions or want to join in, just comment below, and I will. We can answer your question or whatever you want, or I can give you permission to speak so you can join in on it with us. Whatever you want to do, just comment and let me know. All right, Dan.
So let's
So
start with
what are you looking?
Dash. Let's start
Yeah,
with
Dash.
Dash.
Oh, okay, okay.
Okay. So Dash, I was eyeing the May 7th high of 183.50. We tagged it Friday, you know, looking for a move up to the 200, which is at 189 and a half. We're probably going to get there, which would
Uh,
also tie in with the April 20th highs. So which is like a 191.17 ish. So it looks like we're probably going to go there. So that's looking interesting for this week.
are you using a simple there? Because I'm using an EMA and it already failed at the 200. That's where it found supply on Friday specifically.
I'm using a 200. That's a good question. Let me take a look at my e-signal.
You'll be
That's a good
using the
question.
simple.
No, I'm using an E and a 200
EMA?
EMA. Yep.
What? What'd you
Oh,
have
here we
on it?
go. I just changed it. Hold on. Okay, I had to move the chart a little over to get more data. Sorry. Okay, here we go. 185.63 was where it kissed. Sorry about that. I
Yeah,
think it's
yeah,
going
yeah.
to take that out tomorrow.
Yeah, for
Yeah, because
sure.
we're getting, and then I think we're going to 190. We may even try to get up to 200 to that whole number. Um, it's a little bit of a stretch, maybe that's one to look at.
I would like to break out above that 190 for sure. I can
I
see it
wouldn't be
going
bought.
to maybe
Yeah,
maybe 212 after that over some time, a few days or so. I can see that happening.
you're asking for a big move there.
Let's see. If it broke
You're asking.
190, that's an 11.5% move.
You're
I don't
basically.
think.
I see what you're doing. You're basically looking for flat on year, because basically flat on year would put you at here. Flat on year would put you. You need to be 229.73 to be flat on year. That's where you need to be in dash.
Yeah. Well, I'm
So you're
looking.
basically you're looking at
Yeah.
flat on year, potentially going green on the year. But right now we're red on the year. But I see what you're saying. But you just have to be
This looks
careful.
like
This
it's turning around. It looks pretty
this
good,
could be a
actually.
triple top. This could be one of two things. It could either turn into a triple top, which could happen,
Sure.
or this, depending, this thing could blast. I don't know. I don't know.
All right. What else are you looking at?
Let's look at what was another one I had. Hims. Hims was another one I was looking at. That actually popped out of the $30 I was looking at.
This thing has just been. I was in this a while ago for one of my longer term holds, and I made some decent money on it. But it's had some accounting issues, and I just find it it looks good technically. It has, if you want to go pattern wise, it has an ascending triangle. It's above the 8, it's above the 21. It broke the 200 and, retested it, and now it's pushing away from it. The prior support area of like $33 broke through that, now has held it. It looks good for turning around. I have trust issues with this name. I can't. And plus, it's not in my universe. It looks good, but if I were to sway away from my universe, I would not sway this way simply because of my trust issues with this thing.
Listen, I'm just telling you what equity guys are looking at, what real
Yep.
equity prop guys are looking at, not necessarily fake funded. I'm talking about real prop guys. Give me
Yep.
another
Yep.
name.
I was asking for your name. No, okay, fine. I'll give you one. Microsoft. I like Microsoft this week. Specifically, why? This is a bounce play. It's under the 8, it's under the 21, it's under the 50, it's under the 200, right? It's getting absolutely smoked. But here's why. Number one, you zoom out, you look at it's hit this prior support zone around the 350, right? 340, 345, 350 area.
Below the 200, it's uninvestable.
Correct. Uninvestable. Correct. I'm not talking about investing. I'm talking about a quick little, maybe 2 or 3 day bounce play. Why?
What?
Hang on, let me lay this out. Since the high of June 1st to the low of June 25th, so last Thursday, 25% down in 17 days. And then you get a nice 5% bounce off that prior support area on Friday. Basically, what I'm looking for, if you want to go, so you could always say, hey, 50% of the move needs to hold from Friday, right? So 50% of the move, that puts it around 365 area. That's also the low of the 3-day pivot. Daily pivot would be from Friday was 366 or so. So really, I think a good area to risk would be 366 to 364. Put a stop at the low of Friday and see if you can catch a few dollar move off of that,
So
and then maybe hit the 21, take a little bit of profit, trail the stop, and maybe we get to 400. I think 400 is a stretch, but this has been absolutely demolished. And if we get rotation back into the hyperscalers away from memory, I think that's valid.
Okay, so let me ask you a question.
Yep.
What have I always told you?
You told me a lot.
How high is high? Who knows? How low is low? Who knows?
Yes.
And the market is there to hurt the most amount of people in the shortest amount of time. And it does just that. Microsoft is the perfect study case on this. Because how many people you think were buying this going, how much lower could it go? How low could it go? It's Microsoft.
Right.
And it just kept going and going. Right now, you have no reason to be long this thing. Outside of maybe if it gets above 380, then you may be looking for constructive long. But right now, what exactly are you trying to hang your hat on over here? Off of
Uh,
what?
quick. I just laid it out. This is not a
I know.
investment.
No,
It's a
what I'm saying
quick
is,
cash flow play.
okay. Now let's say now it's Microsoft. Let's say it gaps down 2%.
I hate gap downs. Today's a gap down year for me, unfortunately. I mean, that would not be ideal. I'd probably get out unless it gaps down, more than 2%, and then the 15-minute rule comes into play. Let's see if I got in at 364, 2% would be 357.30. That would be just above the low of Friday. Either way, all right, we don't got to talk about this. Bad idea. I'll move on.
It's not.
Crowd
No, it's not
strike.
a bad idea. It's not a bad. It's not a bad idea. It's actually a good idea because I like that you brought this up because this is a lot of people look at this and say, okay, I'm going to try to find a way to get involved with this. But right now, it's not telling you that it wants you to be involved. So if you get above 380, okay, then you at least you say, okay, I got 380. Maybe I can get a move up to the 21 day, which is $10. Okay, fine. I get up to 380. At least I could risk. Maybe I'm risking. Maybe I risk $10. Do a 1-for-1. Okay, fine. That kind of makes sense over here. But to buy it here, you're kind of buying it in no man's land. So
So
this is actually, if this wasn't
sorry.
Microsoft, would you be looking at this thing? If this wasn't Microsoft and I pulled this chart up, would you look at this and say, okay, I want to be involved with this? Forget the name,
I mean,
forget the ticker.
no. If it
That's
was
it.
at a
That's what.
support,
That's your
yeah,
answer.
okay.
I'm saying
So,
no. I'm saying you're looking at it because it's Microsoft. If it was, look at Netflix. Okay, let's take a look at
oh
Netflix. Let's
god,
go to Netflix
Netflix looks
quickly.
like trash.
No, but 1 second. How many people? How many people said to themselves, okay, it's Netflix. It's Netflix. Let me get involved with it. It's the
I
company's
see what
not
you're
going
saying.
anywhere. And look what happened to it. So it's kind of the same concept. You have to take the ticker out. Forget the ticker. Look at just what is it doing? If it doesn't look, if you can't explain to a kindergarten student in a sentence or less why you should buy something, you know the answer. Or why you should sell something, you know your answer.
Hmm.
Keep it simple, stupid. The more complicated it is, the more it's not going to work. And by the way, you think you're the only person who looks at that at Microsoft saying, "Oh, I'm going to try and do this." How many other people do you think are doing the same thing? And what do you think's going to
Yeah,
happen
it's
to
too
them?
obvious.
What do you think's going to happen to them? They lose money. Go with the easy money. That's hard money. That's not easy money.
Yeah,
You
you're
go to
right.
I'm just going to pull it up in a second. Let me see if I can find one that's easy. Hold on. I hate to. Let me see if I can find one. Hold on.
I think I got some easy ones. Look at cybersecurity. I think that's where it's at this week.
Give me a ticker.
CrowdStrike,
I know.
Palo Alto.
No, that's fine. Wow. Okay, so CrowdStrike. Okay, first of all, this has been on some tear. My God,
Yeah.
wow,
Uh-huh. Yeah, I know.
holy crap. Okay, this is very defined. How much would you risk on this?
I risk my standard, my full
No,
size.
you need to risk more than this. If you're buying, let's say 705, or you're buying Friday's high, let's just say, you got to give this. You have to give this to like 660. It's a lot of room. You
Uh,
kind of have to.
hang on. I have my entry. I entered at 683.80. My stop was 660.91.
Okay.
So it's
Yeah, that's.
a 22.89 per share.
Well,
Three,
where'd
three,
you buy it? 683.
yeah, 683.80.
What were you buying it against?
Um,
I say,
I
what were you? Where did you buy it? That's what I'm asking.
I think I bought it on Tuesday. That was going to get, so I held this for longer than what I wanted to. I was going to close if it didn't move on Friday. I bought on, I'm pretty sure it was last Tuesday. I bought this. It was after that pretty strong bottom tail off the 30-minute.
Stop and sale.
30-minute on June 16th, 9:30 opening range.
Oh, June 16th.
Yeah, I'm pretty sure that's the Tuesday that I got in because I held it through. It was either the 16th or the
It's almost
18th.
like a long-legged doji. The 15th was like a long-legged doji.
Yeah. So what it
I'm
was
gonna
it
ask
was
you a
above
silly
the eight
question.
basically. It was above the eight. It was holding anchor VWAP from this prior low. The only thing that I didn't like about it, which it got rejected, it has a huge pivot on gap from
Right.
May 29th of 721.74 to 703.22. So it's coming up to it again. We'll see if it actually pulls through.
I mean, this is ugly. I mean, I don't want to insult you. I'm just saying
Oh,
this is not
you're
clean.
not going to tell me. It's fine.
This is ugly. This is really an ugly chart.
It
This
was
is really
clean when I entered and it turned ugly and I held it through the ugliness because my stop was holding. That's where I was in my definition. That's where I was wrong and it held. And so instead of me trying to get into other names that were potentially extended or I was comfortable with it and I just let it ride and do what it does. It was clean when I entered, but it got it got sloppy. But
it's
this
an
week,
ugly chart too. CME is a very ugly chart now.
oh yeah, it's got smoke. So CME trades with metals, yeah. That's what it seems like.
CME trades with everything.
I don't know.
They
It's
just
the correlation right now is really seen with metals.
the market's going up, so that no one's really piling into CME, so they're not really
Yeah,
making so much money.
that's
So
fair.
some of the exchanges, the exchanges aren't really doing so well. You look at ICE, which is the New York Stock Exchange, as well as ICE itself. ICE. It doesn't look. I mean, they're all basically look at the exchange. They all pretty much look the same. And let me just look at Nasdaq. I don't remember which one it is. It's an NAQ. I never remember the NADS maybe. I never remember what the Nasdaq ticker is. Damn it! Hold on. Let's find it. Some search. Here we go.
NDAQ.
NDAQ.
Yeah, NDAQ.
Thank you. I mean, you look at all these exchanges. The exchanges look like just like crap.
Yeah, they do.
But
I don't understand that.
One second. Let me just look at one. Hold on. Oops. Oh God, what is it? What's BATS? Because Edge and EdgeX are not publicly traded. What BATS is? So we'll search BATS. BATS. There we go. Stock.
Yeah, the exchanges don't look good though. I got a clean one for you. Go look at Palo Alto or OKTA, and also FTNT.
Oh, you
Those are
gotta get me. Gotta let me pull them up. Hold on a second.
here. Let me give you the cleanest one. FTNT. Go look at that. That's clean.
Okay. FT. Fortnite.
Fortinet. Yeah, it's cybersecurity.
Fortnite.
Not
Yeah, I mean,
Fortnite, the video game.
this is pretty good actually. This is pretty good.
Right? PANW.
Palo Alto.
Yes.
Yeah, but again, you can't really buy these now.
OKTA.
Oh my God. This one you could probably buy. This one looks a
This
little
was
better.
clean. Yeah.
That was
I like the
clean. You don't feel
breakup
like you're
of this.
chasing this.
Yeah,
You don't feel like you're
125. Yeah,
chasing
you're
this.
chasing a breakout in Palo Alto.
I feel like if you buy here, you're looking for you could buy against. Like this is actually a good spot to buy it for tomorrow. 124, 125. This is actually a really good spot.
Yeah, 3-day is sitting around the low of it is 120.71 or so.
Yeah, but
You
that'll
got
adjust tomorrow.
against that.
Yeah, but that's going to adjust tomorrow. Why is it at 127? That doesn't make sense. Should it be at 127?
No, sorry.
It should be under us.
No, it's $120.71.
Oh, that makes sense. Okay, that makes
Yes.
sense. Yeah,
Yeah. No.
that makes sense. That makes a lot more sense. What was another one that I was looking at? Just a little bit of the video just quickly. I haven't looked at that in a while. NVIDIA. You know what the funny thing
Nvidia
about
looks like
NVIDIA is?
trash. Yeah. No, it's not.
You know what the
It's not the
funny
place
thing
to
is?
be.
Nobody wants it now. Remember, I always tell you, buyers live higher, sellers live lower.
Yeah.
So this thing will get down to $160. No one's going to want it. Once it goes from 160 back up to 210, everybody's gonna be falling over their face to get it.
Right.
You know, I mean, as much as it's, I said it, before my 26 pick was Google. I still think Google looks, granted, it's below everything right now and it's not looking so amazing. I think the stock just looks really, really good in general. They're just flying on all cylinders. I just think I'm doing Broadcom with another one. Broadcom, they're all going for the 200. All these suckers, they're all going there. What's some of
Yeah.
the what's some of the Finwit stuff you were looking at?
You want me to get some Finwit stuff? This week, Micron, Nvidia, Rocket Lab, ASTS, HIMS was on
Oh,
there.
Rocket Lab. Whoa, stop. It's RKT.
RKLB. It's gotten crushed. It had a
Was looking.
huge move, and then SpaceX ruined it. Basically, took a lot of money
Yeah,
out of
bro.
the whole space theme. So PL, ASTS,
Hold on,
IRDM.
we'll get to that. Whoa, stop. Let's just sit at Rocket Lab for a second.
Yeah.
It's
It's
actually
at
in
a
an
pivot on
interesting
gap
spot.
right now. It is
It's
now. Yeah.
actually
If it failed to hold that breakout, unfortunately.
it's actually in an interesting spot. It's actually in a very, very interesting spot.
Yeah.
You
Just
actually
above the
have
200.
Yeah, but what you have here, if you really look at it, is if you look at it from, let's say, the highs going back to May 27th, you really have your H. This is your lowercase h,
Yep.
and we broke through it. There is support down here at this like 71, 72, 75 area. It might get to this. That might be a spot if you really want to bet
Yeah.
involved with it.
Yeah, 70. I got 76 to 77 mapped out with the 200 EMA. This is also, it's literally holding it made about halfway through on Thursday, the 25th, pivot on gap from May 7th. So that big old red bar before it launched of 81.36 to 79.51. So you got a lot of potential confluence for support in this area. I was
No, it's not bad.
hoping that the breakout area would hold, obviously, but then again, it's like it's underneath all the EMAs. It's got a lot of supply above, yada yada.
It was a SpaceX. Let's look quickly at SpaceX. SpaceX is starting to get an 8-day. Starting.
Yeah, it is.
The problem you have with SpaceX, and this is why it looks like it's going to go lower.
It does look like lower.
The primary problem that you have here is that you did 100% retracement. That's your biggest issue. You're literally back to where you started. That's the biggest issue with this thing. And it's not so much from the trading aspect of it, it's the valuation, because everybody knows that this thing is way, 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 way. Did I say way? Way overvalued.
I think you missed
So
one.
this may get to $135. Now, I don't know if it launched already or if it's launching, a double leverage short on SpaceX. There is one existing.
Shut up! Oh my god.
And the problem. So here's the biggest issue, and I think this is actually a good segue into this. The problem with the market right now, more than anything else, the biggest issue is you have more ETFs than you have stocks. Is problem number one. Problem number two is that you have all of these single stock ETFs that are double and triple levered, which also is a problem. You also have the fact that I'm not sure when exactly the launch is. I just don't remember. But basically, within the next roughly week and a half to 2 weeks, CME is launching 50 single stock futures. Are coming. They are coming. I think it's in 2 weeks or 3 weeks. I'm not sure. But I think it's around earnings season. And basically, every single one of these single stock futures, each contract is equal to 600 shares, and they're going to trade round the clock.
Whoa.
So
the problem that you have, and this is the point I'm trying to make here, is that when you're looking at, let's say, for example, double and triple levered ETFs, how do they actually work? How do they make money? Do you know?
I don't.
Okay. What they do is they're not buying, all these shares. I mean, obviously they're buying these shares, but they're doing a lot of it in short dated options. That's why they're day trading products because of the decay. So they're really designed to go to zero. That's what these things are designed for. If you look at all these direction funds, let's just say, I'm just picking on them, and you read through what's in these things and you read the prospectuses, you read everything, it clearly states that these are short term. They're really designed for day trading. They're not designed for holds. Now, when
Hmm.
everything is going up, it's no big deal because the decay isn't really killing you so much because everything is going up. But when these things start to really kind of like roll over a little bit, they don't match dollar for dollar. And that's where they start to become a little bit more of a challenge. The reason why this is an issue for the market is because you have all of this levered products that are being introduced every 10 minutes. It makes the underlying stocks not as compelling to trade anymore. So people don't even trade. Like I would say, I have to look. I'm going to check tomorrow on the Bloomberg if I can look it up. I would say that the double and triple levered Tesla ETFs probably do more volume, at least on a volume based, on a dollar volume based average than the actual stock does. And I would venture to say that if you start looking at some of these other stocks, you'll start seeing that the ETFs that are associated with these things on the double and levered side are doing more dollar volume than the actual stocks themselves. Now, what does dollar volume mean? Dollar volume means how much of the stock is actually moving, like from a value perspective, valuation. Sorry, is it 300 billion? Notional? Is it 100 billion? What is it? Like when you look at, let's say, um, Nvidia on an average day does enough volume, at least from a dollar perspective, where it's doing three, four, $500 billion of transactions every single
Hmm.
day, which basically means that it's giving birth to an S&P company every single day just based off of dollar volume. That's what it's doing. If you look at, let's say, and by the way, it's the most valuable company in the world, right? By market cap, right?
Hmm. Yes. Yes.
Okay. Okay. Do you think it's normal that it's moving 3 to 5% every single day from high to low?
Oh, probably not.
Okay. Micron moves on an average day high to low about 10, 11% every single day of its mark of its price. So if it's every single day, every single freaking day, that's how much it's moving. It's moving about 10% of its share price every single day from high to low. Do you think that that's healthy? You think that's normal? Is that the right thing to be happening? In
No.
the olden days, the market makers would never let that happen because that's not fair and orderly markets. The point I'm trying to bring out is we touched upon this last week, but it's 2 weeks ago, whatever. It's good to bring it up again. Is because you get all these, and I hate to use this word, but the maniacs that are buying 2 and 3 lot contracts, they need massive moves in order to make money. Because really, on a let's say on a micron, if you want to buy 1,000 shares, how much money is that? Do you know how much money that is? Do the math. 1,000 times whatever. What is it? 1,093. What is it? It's north of $1 million
Um,
for 1,000 shares, and 1,000 shares is not a lot of shares. So how
yeah, it's
many shares?
1,132. That's per share right now.
Okay, so that's over $1 million for 1,000 shares.
Yes.
How much? What I'm saying. So everybody always says the funds, the funds, the funds. It's not true because how much capital do you think they can allocate to it? What are you going to do if you buy? Let's just say you buy 10,000 shares. That's over $10 billion, depending on your fund. If you're a $100 million fund, that's 10% of your book. You're not going to buy that.
Hmm.
You get where I'm going with this?
Yes.
So it's not funds that are doing things. And I hate to say it, but I'm going to say it anyway. It's the maniacs that are buying. These retail maniacs that are buying these 2 and 3 lot contracts. You get 1 million, 2 million people like this that are doing this. They push. They do massive gamma squeezes, not because of shorts, just because they're pushing it. And what do you think? And what do you think Jane Street and Citadel are doing? They're front running all the orders. They keep pushing it up. So that's why it keeps going. It's not going because everybody's falling over their face to get into Micron. Because again, I've said it on the videos a few times. Granted, I didn't do it this week, but I keep saying it over and over. And I was waiting for someone to say something, but they haven't. If it's $1,000, or in the case of SanDisk, it's $2,000, how many shares are you really buying? Realistically, 1,000 shares here, not 1,000, 500 shares of SanDisk is how much? It's almost $1
A
million
lot.
bucks.
Yeah.
You get where I'm going with this? So it's like,
Yep.
it's understanding like what is going on. So it's not like these things all of a sudden like funds are falling over themselves. You can't, because as much as everyone wants to think the funds, you can't explain to your investors why your allocation in your fund is 10, 15, 20% of your allocation is in one stock. They'll pull their money. They'll pull their money from you. Here, value funds, and then we'll go into scanners, but value funds. Let me ask you a question.
Yes.
What was the proposition that a value fund offered? Think David Einhorn. David Einhorn is a value fund. What did he offer that people gave him money? Or even Ackman. What are they bringing to the table? Do you know?
I can't say promise, but the promise to beat the S&P 500, to beat the
Okay.
market.
Okay. So if the benchmark was, let's say, 10% a year, right? In
Yes.
order for a value fund to show that you should invest with me, they need to be doing 13, 14%, which means they have to beat the benchmark by 3 to 4% every single year consistently. Why?
Yes.
Because the model is, it's 20%. Well, at least the hedge fund model at one point was 20% of the profits, 2% admin fee. And the admin fee was on the total assets that you had. So that's why these fund managers, that's why everything goes by AUM, assets under management, because that's really where they make their money. Because win or lose, they're getting a percentage of what you bring. So if you bring in, let's just say you give them $10 million, what's 2% of $10 million?
10%
200,000.
of 2 million.
No,
Yeah,
2%.
200. Yeah.
2% is $200,000.
Yes.
You give them that money right away, they're taking from you $200,000 right away in their pocket. Boom, cha-ching, right away. Win or lose, whether you make money or not, they get their 2%, no matter what. Is it any wonder why these guys live in mega mansions?
Right.
you have $1 billion. Just do the math. Let's say, for example, you have a $10 billion fund. You're getting 2% as an admin fee. How much is that?
It's like 200 million or something like that.
200 million. Yeah, exactly.
Yeah.
And they didn't push your button yet. All they did was just collect the fee.
That's
And
nuts.
then they get on top of that 20%. Then they get 20% of the profit. But the point I'm trying to make is, when you're charging that kind of money and you're running that kind of money, your allocations have to be done. Every book is a long and short book. Your long sum, your short sum. You don't have, you're not allocating, 15% of your fund to one name. It's a different animal. It's a completely different animal. So they're not the ones really pushing this stuff up. Yes, were they involved in silver to 50? Yes, they were involved in silver to 50. Once silver got away from them and it started going really, 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 really higher, they have to bring their allocations down. So you look at quarterlies and you're going to see the quarterlies, there might be a rebalance now. Why? Because let's say, for example, we know that SpaceX is going into the queues, right?
Yep.
So they have everybody who's a fund manager that is a benchmark to the queues, right? Or they're an index fund. They have to, because of where SpaceX is, they had to sell all their stuff because they got to make room for it.
Right.
But by nature, they have to follow the queues. They don't have a choice. So Invesco had to do it, T. Rowe Price, Fidelity, Vanguard, they all had to do it. It's not an option, by the way. They have to do it. So you're getting, I remember I told you it was billions. I think it was like 80 billion worth of NVIDIA that had to be sold just to make room for SpaceX, because SpaceX is going in. The point I'm trying to make, though, is that as these things keep going, they keep getting pressure. You will get forced selling only because of allocation. They don't have there'll be no, and not because of SpaceX. I'm saying in general. If, let's say, you're book heavy on video, you're book heavy on semis. If they keep going the way they're going, you have to lighten up, because you can't explain to your investors why you're still sitting in this thing. Portfolio management is very different than trading. Portfolio management, you're doing everything you possibly can to minimize the volatility. A trader needs volatility. That's the difference. Portfolio managers do not want volatility. Why? Because when you have volatility, it skews your returns, completely skews your returns. And you need to justify why you're trading so much. If you're not really a trading book, if you're just a regular fund managing, if you're doing all kinds of trading, you know what happens to your returns? They get diminished because they're getting eaten by your trading cost. So you kind of have to really understand the machine that's kind of happening in the background, you know. But you have any other names you want to go to? You wanted to go to the scanners.
No, let's talk about scanners.
Okay. Okay. Are we talking about why I hate them? And why I think they're a waste of time?
No, I thought you loved them. What are you talking about? Yes. And I'm going to attempt to play devil's advocate. I'm just kidding. Go ahead. Tell me your hate of scanners.
I'm going to let you go with your love first.
I don't have a love of scanners. I used to have a love of scanners. I was especially during my first few years of trading. I won't mention the name, but I paid for a popular scanner, and I paid a lot per year, relative, I think,
Was
for
it
this
Trade
scanner.
Ideas?
Yes, it was. Ding, ding, ding.
You know
Yeah,
what's
yeah.
interesting? Before you
You know
start,
exactly why, right?
no, but
Yeah,
you know what's
yeah.
interesting about Trade Ideas? When
What?
Trade Idea, so years and years and years ago, you'll actually like this story. Years and years and years ago, when I got it, when I started in equity trading back in T3, even well, I would say even before that, before I even got there, Trade Ideas was just starting.
Uh-huh.
There was another company out there called, I think, Mad Scans. I
Okay.
think that's who they were. There was Mad Scans, and then really, how did really Trade Ideas really start? SMB tried to sell. I had heard about this. SMB tried to sell a scanner that they had proprietary that was really backed by Trade Ideas. That's really what it was. And it was called, I think it was called the SMB scan. I forgot what it was called. And it was basically kind of, that's how Trade Ideas kind of started. Before that was Mad Scans, and before Mad Scans, there was another one out there. They shut it down. It was basically by um, two floor guys, and it was actually great. It was one of the best ones. It was probably the best scanner I'd ever seen in my life. Honestly, it was probably literally the best. They took it down for some reason, but really, what Trade Ideas brought to the table back then was something interesting that no one else was doing. They weren't AI based. You could customize. You could do a lot of things with it. I don't know what it is now. I remember I had a call with them because I guess I was just trying to see if I could learn something new.
Mm-hmm.
And at the time, I knew a lot more about it than the guy I was talking to on the phone. For whatever reason, it wasn't the owner; it was somebody else from the company. I'm not saying he was bad or anything. I'm saying is I just spent a lot of time with it. And the
Yep.
biggest problem with scanners in general is that, and this was one I found right away. Once I started realizing that as much as I had like 6 scans, they were insane. I couldn't make any money with them. And I couldn't figure out why I couldn't make any money with them. And one of the things that I realized was the problem with a scanner is that when you scan for stuff, you're getting into things. You don't know the stock. You don't know what it does. You don't know how it moves. You don't know what to expect. You know nothing. You have a stock that just pops up on a scanner. Okay, boom, let's go. And that's what everybody does. They do the same thing. Boom, let's go up top. It's on my scanner. Let's rock and roll. And that's where everything falls to shit. Because if you're getting into something that you don't know, you're not going to make money. You have to stay within your universe. If you stay within your universe, you're good. If you don't, that's where you start running into your problems. That's where you look at the best equity traders, the very, the very best, trade the same exact thing over and over and over and over again. They do not deviate. Maybe they'll replace things, they'll add some things in, but for the most part, they do not deviate. That's what you need to do. You need to stay within your lane. That's how you make money. You go start scanning and start doing it. I'm not saying you can't find a gem here and there, but if you're relying on scanners to give you stock ideas every single day, it means you're not prepared. That's what it means. Plain and simple. It means you're not prepared. There's not one successful guy that sits there every single day scanning. I don't care what anyone says, because I know it's not true. That one successful guy that's sitting there scanning every day for stocks, and they're making money every single day based off of the stocks that they're scanning for in the morning, and they're just going with it every day. I don't believe it. There's no way. There's no one doing that. Nobody. They trade the same things over and over and over and over and over and over again. They know it. They know them inside out, and that's what they do.
I think that
I think they're a big
advice
waste of money.
was,
Hmm?
yeah, I think that advice is probably been some of the most valuable advice you've given me personally. Because number one, yes, you are correct. You get to, and I'm still developing, getting to learn how all these names move individually. But over the years to come, I intend and I expect to know them inside and out and know all of their little personalities per se. I think the biggest benefit to staying within a universe though is it keeps you focused.
For sure.
It makes you sit down and do your homework instead of getting up every morning, popping on the scanner and seeing what randomly pops on, because and then you are making your decisions when the market is open, when emotions are the highest. And you don't know what you're trading. I think there's a psychological comfort in knowing the names that you're going to be focusing on the next day via homework, as well as knowing those names, just having a general comfort knowing that you look at them all the time and you have some sense of how they're moving. And it just keeps you straight up focused. Because when I was looking at those scanners, I was back testing, I was creating my own filters, I was back testing my own stuff, blah blah blah. And you could have some days you'd have two or three, and then other days you'd have 50 on there. And then all of a sudden you're looking at this column over to the left, and ooh, you got the shorts. Ooh, you got the ones that are rippers. Ooh, you got the high short floats. Ooh, you got, meme stocks. Ooh, you got this. And all of a sudden you find yourself clicking around in all these different tabs, and you're at the computer for an hour and a half looking through charts, and you're like, what did I just get done? Like, all I did was scan through all these charts, make all these different plans, and then the day opens up. You have so much to all these plans that you made. It's too much. You can't keep track of it. And then you get basically paralysis from analysis. And then all of a sudden you're looking at an X and be like, oh, this person said that. Let me go look at this. And then all of a sudden you're buying based off of a 30-minute stop loss on a higher low on a name that you didn't even do homework on. And you lose your money, and you waste a ton of time at night, and because you just get distracted. It's kind of like I don't have the Robinhood app, but I am familiar that they've kind of made it seem gamey, right? And so I think scanners have the potential to be the similar way, and it just straight up acts as a very strong distraction, kind of like a shiny gem. Ooh, look at this new name. Oh, look at that ascending pattern. Look at that descending triangle. Ooh, look at this bear flag, bull flag, reverse head and shoulders, blah blah blah. And you can just go through and through and through and through and not actually get anything that is meaningfully productive done. That's what I learned by staying the focus on it, by
Sure.
having a universe.
For sure. For sure. I agree with that. I couldn't agree more. That was actually very well said.
Thanks. A little long-winded, but that's how I do it.
No, good.
Very
Good.
good. All right. Well, good conversation. Good preparation for the week. Do you have any closing thoughts to close things out?
I think we should. What should we? What should we plan on for next week?
I think we should keep structure. Have a state of overall markets, probably like the most important catalyst, important news that goes on, market wise, whether that be earnings, whether that be I don't know, market data, whether it be Fed stuff, and then move through macro stuff, geopolitics, really, any important news within that realm.
Okay.
Go through specific names, equities, commodities, preparation wise, and then end with a special topic, just like we did now, and then take questions, answers, and questions and answers at the end. We had a couple of people join, but they dropped off. So maybe we should. I could reorganize that to do like a little question and answer in the middle. Either way, I think we should keep that structure. You
Yep.
agree?
Yeah, works for me.
Yeah, and then have like a specials topics at near the end, or something like that. Just kind of like this. Special topic for next week? I don't know. I'm going to start asking, putting up. So we're on for next week. Yes.
Yeah.
As of now.
Yeah. Yeah.
All right. So
yeah.
I will start being better at posting throughout the week, and then asking for like engagement throughout the week to see what you like people what might actually want to
Yeah,
listen
you
to.
got your 1,500 followers, so you gotta take it for a spin
Dude,
and see what's going.
I'm at 1575. I've gained some traction over the last week. I've
Look
gained
at
like
you.
100 followers over the last week. I know, man. I know. So
Look at you.
I'm gonna try and keep the ball rolling, obviously, and hopefully we can, obviously continue to grow together. Be
Is
great.
there a way we could do like a? I'm wondering if we could do a screen share to see like to get the charts on. Or is that not even possible?
It probably is possible. I don't know how to do. I think have I listened into some that did. I think it's possible. Let me look into it. Let me look
Because
into it.
I think that might be a
And
more
I
of a value add also. About a little bit.
Yeah, I think so too. Visually simulating, people can
Yeah.
see stuff.
Yeah.
Yeah, I agree.
All
All
right.
right, cool, good stuff. I'll
Stuff.
brainstorm on special topic. You brainstorm on special topic. And yeah, we'll get together next Sunday.
And I'll see you tomorrow.
Sweet. See you tomorrow.
All right. Later.
Later.